Hey there, in this video, I'm going to break down 9 distinct ways that you could invest your first $1,000, including the pros, cons, and the profit potential of each option. Now, some types of investments are of course going to be out of reach with just $1,000. For instance, buying real estate. But you also might be surprised about how many different ways there are to invest, even if you have no experience and only $1,000 in your pocket. And the thing about investing is that it's kind of addictive. Getting over that initial hurdle is a huge step because things start to snowball from there. And while $1,000 might not make you a millionaire, getting started today, even with a small amount of money, could put you on the fast track to financial freedom. So let's talk investing and break down this list of 9 ways that you could invest your first $1,000, including the difficulty, the risk, and of course, the profit potential of each option. All right, number 1 is pay down debt. And this one is obviously pretty self-explanatory. If you have outstanding loans like credit card loans or car payments, whatever, you could pay that down. Now, this definitely classifies as an investment because you're charged interest on every piece of debt that you have. And whatever that interest rate is, you have to compare to the interest rate that you could earn by investing that money elsewhere. When it comes to the difficulty level of this strategy, it's super easy. All you have to do is make the payment. When it comes to the risk, it's actually 0. Compared to every other item on this list, this is the only strategy for investing $1,000 where you can absolutely guarantee your rate of return. And of course, that's going to be the interest rate that's being charged on the debt. So let's say you have a credit card with an outstanding balance and the interest rate is 20%. Well, by paying that down, you're saving 20%, or you have a 20% ROI. When it comes to the profit potential of this strategy, well, the ROI is just going to be equivalent to whatever the interest rate is. So it really depends. Again, if we're talking about credit card debt that's 20%, then that's actually a really good rate of return and probably much better than you'll get investing elsewhere. But if it's low interest debt, like a student loan payment where the interest rate is say 3% or 5%, then maybe it's not quite as good as some of the other options. Either way, taking $1,000 and using it to pay down debt is never a bad choice unless that debt is literally free. If it's 0% interest or somewhere close to that, then maybe you'd be better off putting that money elsewhere. But if you do have any high interest debt like credit card loans or car payments, you probably do want to focus on paying that down first before even considering any of the other strategies on this list. The second way that you can invest your first $1,000 is to put it into a mutual fund. And these are managed funds where the fund managers will pick and choose investments for you. So you don't have to do any work. All you have to do is buy shares in the mutual fund and then let other people handle everything for you. In terms of the difficulty level of this investment strategy, it's pretty easy. Of course, you do have to choose which mutual fund you want to invest in, but after that, it's a simple matter to just transfer the money over. When it comes to the risk of investing in mutual funds, really it's your choice because there's tons of different products out there that are tailored to different risk profiles. So let's say you're a conservative investor and you're not so worried about massive explosive growth, but you just don't want to see your investment decrease significantly over time. Well, they have a low risk option for you that's probably more heavily weighted towards bonds and GICs, things like that. On the other hand, if you have a high risk tolerance and you just want to go for flat broke growth, then they have mutual funds that are geared toward that as well. For the profit potential, it's going to be low to high depending on your risk tolerance and the type of mutual fund that you invest in. But one thing to mention here, and really it's a major con against investing in mutual funds, is that the management fees are very high. Sometimes they can be well over 2% per year. That really eats into your bottom line profit. So let's say that you're a conservative investor and you invest in a low risk mutual fund that returns on average 5% per year. Well, once you take off 2% for a management fee and then account for inflation, you're really not left with much. In my opinion, there's a much better alternative to mutual funds where the fees are much lower, and that is going to lead into number 3 on the list, which is index funds. So index funds are technically managed funds, but there's much less work that's involved because instead of picking and choosing stocks, bonds, and other products, the fund managers just track overall market indexes. And there's different markets that they could track, for instance, the S&P 500, the NASDAQ, they could track foreign markets, or there's also total stock market indexes. Now, in terms of the difficulty level of getting into this, again, it's very easy. Of course, you do have to select which products you want to invest in, but once you've done that, it's a pretty simple matter to just put your money into it through whatever broker you're using. And if you're just looking for a large general market tracking fund, for instance, SPY, the S&P 500 tracking index fund, then it's very simple to just choose that and invest $1,000. In terms of the risk of this investment investment strategy, I'm gonna say that it's actually medium. It really depends on what your time horizon is here, but in the short to medium term, there could be massive price fluctuations. Let's say there's a stock market crash tomorrow, then obviously you'd be sad if you invested $1,000 today. In the long term, however, it's very likely that this type of investment strategy will pay off. If you look at the S&P 500 index, for example, you can see that over time, it has steadily yielded solid returns. Even if you bought at the trough of some of the worst market crashes in history, today you would still be way up. So really, if you're looking at this over a much longer time horizon, then it's not super risky. It really just depends on what you want to do. How soon do you want to take the money out? And honestly, if the S&P 500 index did not bounce back after a serious crash, it would probably mean that the American economy has completely failed and we're probably all screwed anyways. So what does it matter that you lost $1,000? For profit potential on this investing strategy, I'm also going to say medium. Over the past 10 years, the S&P 500 has returned an average annual ROI of 13.6%, not accounting for inflation. Over the last 50 years, that figure's been 10.9%. That's pretty good. Now, obviously, starting with just $1,000, this isn't going to turn you into a millionaire, but if you keep adding to your position over time and then you get that snowball effect of compound interest, it can really add up. And I think this is honestly one of the best places to start. A fourth strategy that you could use to invest your first $1,000 is to invest in yourself by taking courses or doing training, things like that. Now, you've probably seen a lot of people on the internet saying that this is hands down the best way that you can invest your first $1,000. And a lot of those people are probably also selling you a course that costs $999. While there are a lot of scams, there's definitely something to be said about using money to improve yourself or to develop skills and experience that you can then leverage to make more money down the road. So when we're talking about the difficulty of this type of investment strategy, I'm gonna say that it's medium to hard. It could be relatively easy to pick a course, but if you actually want to get the most out of it, then it's going to be difficult because you have to put the work in. If you don't take something like this seriously, then I don't see the point in doing it at all. So you do have to dedicate serious resources to this. For the risk of this type of investment strategy, I'm going to say low, but it does depend on how you look at it. If you're expecting a $1,000 investment in courses to directly translate into significant profit potential, then you might see this as a riskier strategy because I don't think there's a lot of courses that can actually deliver on that. If you take it for what it is though, as just a simple stepping stone to building up a better career and building your portfolio, your knowledge, your expertise, then you can't really go wrong. The worst case scenario is that you've learned a new thing and that's never bad. Now, the profit potential of this type of strategy is definitely low. Like I said, I don't really think that there's any $1,000 course that you can take that's gonna teach you to 10x your income, for example. If you see anybody selling a course that costs $1,000 and saying that they're gonna change your life forever, then I'd probably be skeptical and run far in the other direction. Again, it could be a solid stepping stone, but as a standalone investment for profit potential, I think it's low and I'm skeptical of anybody that says otherwise. All right, the fifth way that you can invest your first $1,000 is to invest in individual stocks. Now, when it comes to the difficulty level of this investment strategy, I'm gonna say that it's easy to actually do, but very hard to do well. And what I mean by that is, let's say you download Robinhood or Wealthsimple or some other simple brokerage app. It's very simple to just put $1,000 into that and start buying and selling stocks. However, if you want to pick and choose actual winners, then we're talking of orders of magnitudes more difficult. There are a handful of people that regularly succeed at picking stocks, but studies have shown that over 90% of investors, including management funds and retail investors, actually fail to outperform the S&P 500 index. So that means basically most people would be better off just dollar cost averaging into a simple index fund. When it comes to the risk of this investing strategy, I'm gonna say that it's medium to high, and it really depends on the type of companies that you're choosing. If you're investing in large cap, well-established household name companies like your Googles, Amazons, Facebooks, then over a long period of time, you're probably gonna see some solid results, and those companies are not very likely to go to zero. On the other hand, if you're investing in highly volatile and speculative penny stocks, then the risk profile of doing this is way higher. For profit potential, I'm also gonna say medium to high. In the short term, you never really know, but if we're looking over a longer term time horizon, if you pick good companies, yes, you could end up making a significant amount of money. And of course, that's gonna correlate to the level of risk that you're using when you're choosing your stocks. All right, the sixth strategy for investing investing your first $1,000 is to put it into precious metals like gold, silver, or platinum. For the difficulty of this investment strategy, I'm gonna say that it's hard-ish, at least if you want to invest in the physical assets, because you have to find a spot to buy it, and then of course you have to find a way to store it safely. On the other hand, if you purchase shares of a precious metal fund or ETF, then it's much easier. You'll never get to own the physical asset, but someone else handles all the logistics of purchasing it and storing it for you, and then if the price of that asset appreciates over time, you still get the benefit. The risk of this investment strategy is low. Over time, these types of assets tend to retain their value against or relative to inflation. Also, precious metals are very unlikely to crash completely, and in fact, in a recession or even a depression, these are among some of the better performing assets. For the profit potential of investing in precious metals, I'm gonna say that it's low to medium, depending on which precious metal you choose. Most of them are gonna be a good store of value, but some of them are better investments than others. For example, if we look at this chart comparing the price of gold, silver, and the S&P 500 over the past 40 odd years, you can see that gold has performed very well, pretty much on par with the S&P 500 today. However, silver has significantly underperformed. So it does depend on what you choose. Also, I will mention that if you do decide to invest in precious metals through a fund like an ETF, you're going to be charged a management fee. It's probably not going to be huge, but it could be somewhere around, say, 1% or so. The seventh way that you can invest your first $1,000 is to put it into a crypto index fund. Now, in case you don't know, a crypto index fund or ETF purchases cryptocurrencies for you, and then you buy shares in that ETF. So if there's some price appreciation in the price of cryptocurrency, then the shares of the ETF are going to increase in price as well. For the difficulty of getting into this type of investment, it's very easy. Currently, actually, there's not that many options because the US hasn't actually approved any of these crypto ETFs yet. So all of them are really based in Canada, and there's only a handful to choose from. Again, if you have a simple brokerage app like a Wealthsimple or a Robinhood, it's very simple to just put $1,000 into something like this. For the risk, I'm gonna say that it's high. Crypto investing is definitely risky. It's a very volatile market, and you could see huge price swings in a very short period of time. So if you're thinking about investing in something like this, you really have to consider the fact that in the short to medium term, your money might double or it might completely crash. That said, all of the crypto ETFs so far only hold the largest, most well-trusted and well-established cryptos like your Bitcoins and your Ethereums. So there's no Dogecoin ETF, for example. For the profit potential of this strategy, I'm also going to say that it's high. With the added risk and volatility that I mentioned in the risk section, of course, you're going to have much more potential for growth. And another great thing here is that since you can invest in crypto through an ETF, it means that you can invest in a tax-free account, a tax-free savings account in Canada or a Roth IRA in the US. And that means that you can potentially save having to pay capital gains taxes on a really explosive asset class. The eighth way that you can invest your first $1,000 is to put it into individual cryptocurrencies. I would put the difficulty of this investment strategy at medium to hard. Sometimes I feel like doing well in crypto is a mixture of investing and gambling. And this leads to the next category, which is of course the risk. You have to have a pretty high risk tolerance to invest in crypto, especially to invest in individual cryptos if you're straying away from some of the more mainstream ones. If you thought that Bitcoin and Ethereum are volatile, then wait till you start looking at some of the price charts of these meme coins or coins. In those cases, I would say that the risk is actually super high as you could possibly get in anything. If you're just buying and hodling Bitcoin, that's one story. But if you're trying to speculate on some of these new altcoins that you think might 10x tomorrow, then that is pretty much as risky can get. Along with that risk though comes that high or even super high profit potential. While you could easily lose your whole bag investing in crypto, you could also 10x your money. People are actually doing it. But you have to be careful because what you see on social media like Instagram or YouTube is something called survivorship bias, where you see the people that have done really well bragging about how well they've done and flaunting their gains to the world. On the other hand, you're not seeing people talking about how much money they've lost investing in crypto because obviously they're embarrassed and they don't want to talk about it. But that other side of the coin definitely does happen, and there might even be more losers than there are winners. And the ninth and final strategy on this list for investing your first $1,000 is to take that money and use it as seed capital for some type of side hustle or a business. It's definitely possible to start a business for $1,000 or less. You might not be able to do something that requires a lot of startup capital or needs a huge pile of inventory, but that still leaves a lot of options. For example, you could start a side hustle on Fiverr or Upwork. You could start an e-commerce dropshipping website using platforms like Shopify, and you can definitely get started for less than $1,000 with that. You could even start a YouTube channel, and all you have to do is purchase a camera and a microphone and you're good to go. The difficulty of this investment strategy though is super high. Starting a real business, not a lemonade stand, but a real proper business is hard. It requires a lot of work, time, effort, dedication, and if you think that you're gonna be able to do this easily or on automation, then you're wrong. At least if you wanted to succeed anyways. And if anybody ever pitches you on a startup idea that's simple, easy, breezy, you just give them your cash, you don't have to do anything, and you're gonna 10x your money, then definitely be skeptical because it's probably too good to be true. For the risk of this investment strategy, I'm also gonna put it at super high. The fact of the matter is that most startups fail, and research shows that 9 out of 10 startups fail within a few years. And here you're not only risking your money, but also all of the time and effort that you put into starting that business and then trying to get it off the ground. For profit potential though, honestly, sky is the limit. You could definitely 10x or even 100x your money if you choose the right side hustle or the right business and you work at it diligently. And the interesting thing about this investment strategy is that it's really the only one that you have absolute control over. Aside from maybe the investing in learning, but even there, it's kind of nebulous and a little bit vague and abstract. But here, if you start a business and you have a product or a service that you're trying to sell, you have specific things that you can do to be successful, and it's all on you. And most of the other investment strategies on this list are more so just put your money into something and then hope that it appreciates over time. So if you want to bet on yourself and you think that you have the time and energy to actually make it work, then I think this last category has the highest potential, but also obviously the most risk. And there you have it. Those are 9 distinct ways that you can invest your first $1,000 today. Of course, there's other things that you could do with the money. You could buy NFTs, Pokemon cards, Beanie Babies, whatever. But then we're getting into some kind of unconventional and highly speculative investments. So I think that this list of 9 is pretty solid and it covers a lot of the bases. Thanks so much for watching. If you enjoyed the video, please don't forget to drop a like down below and subscribe to the channel if you want to see more content about investing and personal finance, as well as starting a business. Thanks, and I'll see you next time.